Massive alert. BlackRock, the world's largest asset manager, with over $10 trillion under management, just sent shockwaves through the crypto world. They're not whispering anymore, they're shouting. The most massive Bitcoin bull run in history is already underway. This isn't speculation. This isn't Twitter hype. This is BlackRock moving billions and moving markets. Today, I'll walk you through what exactly BlackRock is doing behind the scenes, why this bull run could dwarf anything we've seen before, and how everyday investors, like you, can position themselves before the floodgates fully open. Make no mistake, we are standing at the start of something that could define the next decade of finance. Not just in crypto, but in the entire global economy. If you've been sitting on the sidelines, wondering if Bitcoin is dead, if you've been second-guessing whether it's too late, or if you're holding Bitcoin but don't know what's about to hit, this video is for you. Because the moves being made today, quietly, behind the headlines, could change everything. And the craziest part? Most people won't realize it's happening until it's way too late. They'll look back and wonder how they missed the signs. You, on the other hand, are getting the inside scoop, right now. So, hit that like button, subscribe if you haven't already, and let's dive straight into the biggest Bitcoin story of the decade. Part 1, BlackRock's Bitcoin move, 2 o'clock to 6 o'clock, let's lay it out. BlackRock isn't just investing in Bitcoin. They are restructuring the future of finance around it. In November 2023, after months of lobbying, BlackRock's Bitcoin ETF, the iShares Bitcoin Trust, ticker symbol $IBIT, was approved by the SEC. This was a historic moment, because it signaled that even the most traditional, conservative financial institutions now accept Bitcoin as a legitimate, regulated asset class. But here's where it gets even more serious. Since its approval, BlackRock has been scooping up Bitcoin at an unprecedented rate. Reports show they now control over 300,000 Bitcoin. That's worth about $20 billion at today's prices, and growing every single week. Think about that number. It's more Bitcoin than MicroStrategy owns. It's more Bitcoin than many countries hold in gold reserves. Furthermore, it's roughly 1.5% of Bitcoin's maximum supply, and Bitcoin's supply is capped at just 21 million, forever. The significance is hard to overstate. BlackRock isn't betting on Bitcoin. They're integrating Bitcoin into the core of global asset management. Larry Fink, BlackRock's CEO, once called Bitcoin an index of money laundering. Today, he calls it a global asset. He says it has the potential to revolutionize finance and protect wealth in a time of inflation and political instability. This isn't a small pivot. It's a total 180-degree shift. And BlackRock's ETF isn't just a product for crypto bros, it's designed for pension funds, 401ks, sovereign wealth funds, serious players who manage trillions of dollars for millions of people. That's why every Bitcoin they buy is likely locked away for years, maybe decades, not to be dumped at the next dip. Every single day, BlackRock and other institutions are absorbing the available Bitcoin supply, faster than miners can create new coins. This dynamic, demand massively outstripping supply, is what triggers parabolic price movements. And we are still early. Part 2, why this bull run is different, 6 o'clock to 10 o'clock, let's be clear. Bitcoin has had bull runs before, in 2013, 2017, 2020. But this one is fundamentally different for 3 key reasons. First, institutional demand. In the past, Bitcoin rallies were driven by retail investors, individuals buying through exchanges like Coinbase or Binance. Now, it's institutions leading the charge, wealth managers, retirement funds, hedge funds, endowments. These groups don't trade Bitcoin like meme stocks. They accumulate and hold, sometimes indefinitely. BlackRock's Bitcoin ETF alone is bringing in hundreds of millions of dollars per week. Multiply that across Fidelity, Van Eck, Franklin Templeton, and you get billions flowing into Bitcoin on a monthly basis. Second, the supply shock. The 2024 Bitcoin halving cut the block rewards in half. Before, miners received 6.25 Bitcoin per block, now it's just 3.125. This effectively slashed new daily Bitcoin production from 900 to around 450 Bitcoin per day. Meanwhile, ETFs are buying thousands of Bitcoin every day. Demand is outstripping supply by 20 to 1. When you have massive demand chasing limited supply, you don't get linear price growth. You get explosive, vertical price action. Third, global momentum. This bull run isn't just a US story. Hong Kong has approved Bitcoin ETFs. Dubai is positioning itself as a crypto hub. Countries like El Salvador are fully embracing Bitcoin as legal tender. Even the BRICS nations are exploring Bitcoin as a hedge against US dollar hegemony. Bitcoin is becoming a truly global asset class, recognized, respected, and soon adopted at scale. And here's the wild part. Retail investors haven't even arrived yet. Google search trends for Bitcoin are still low compared to 2021 levels. In other words, the smart money is getting in now, before the masses realize what's happening. Part 3. What BlackRock sees, 10 o'clock to 1400. Now, why is BlackRock so aggressive about Bitcoin right now? Because they see three massive trends converging. Trend number 1, the institutionalization of Bitcoin. As ETFs like BlackRock's get approved and scaled, Bitcoin becomes an acceptable, mainstream asset for retirement accounts, corporate treasuries, and even central banks. BlackRock knows that if Bitcoin becomes just a 5% allocation in global pension funds and insurance portfolios, the price would skyrocket well beyond $250,000 per coin. Trend number 2, the collapse of trust in fiat currencies. Around the world, governments are printing money at historic rates. Debt is spiraling. Currencies are weakening. People, and even nations, are looking for alternatives. Bitcoin's fixed supply, 21 million coins, ever, makes it the ultimate hedge against inflation and monetary mismanagement. BlackRock sees Bitcoin as digital gold, but with even greater portability, transparency, and accessibility. Trend number 3, the rise of a new financial infrastructure. Traditional finance is being rebuilt on blockchain rails. Smart contract decentralized finance, DeFi, tokenized asset Bitcoin is at the core of this emerging system, not just as money, but as collateral, insurance, and a store of value. In short, BlackRock sees Bitcoin becoming the foundation of the new global financial system. And they're not sitting around waiting. They're buying now, before Bitcoin becomes so expensive that even trillion-dollar institutions will struggle to accumulate meaningful amounts. The lesson here is simple. When the biggest, most powerful financial institution in the world is buying Bitcoin with both hands, you might want to pay attention. So what does this all mean for you? It means the game has changed. The next Bitcoin bull run isn't about hype. It's about structural, fundamental shifts in how the world stores value. BlackRock's move is not a fad. It's a signal that the financial world is entering a new era, with Bitcoin at the center. If you're already in Bitcoin, congratulations, you're ahead of the curve. But if you're on the sidelines, waiting for a better entry, be careful. Because the longer you wait, the harder it could get to own even a fraction of a Bitcoin. We're witnessing the early stages of a global supply squeeze unlike anything we've ever seen. So here's your action plan: educate yourself. Stay updated. Think long term. Because when BlackRock says the bull run has begun, they're not guessing. They're making it happen. If you found this breakdown helpful, smash that like button, hit subscribe, and turn on notifications, because in the next video, I'm going to break down my price targets for Bitcoin this cycle, the key levels to watch, and why the next 6 months could be absolutely critical. Thanks for watching, and remember, in the new financial world, you don't want to be late.